doing is moving to a short panel discussion on sustainability and its impact on shareholder value. This is an open debate with the companies presenting today. So if you'd like, as well as a panelist, to explore, expand, or jump in on any of the comments and questions and discussion that we're about to enter, then please feel free to do so. We'll also take any questions from the audience a little bit later. And I think we should basically get on with this. So basically, shareholder expectations are increasingly focused on compliance and transparency and accountability for environmental and social issues. And that's probably true of customers as well. So as a result, we've seen management teams shift their sustainability agendas from purely side notes to an integral part of their overall strategy. But where does this leave shareholder returns? So we're here to find out today from the management teams how they've been making their decisions daily. And I think probably we'll start with a very general question. And then what I'd like to do is move the discussion into how you as companies are addressing the sustainability issues and challenges of today. And then later on, we'll talk about how you communicate those, what you're doing to shareholders. So the shareholders have got a very clear idea of exactly how you are essentially managing their money, but in a sustainable manner. So Heather, why don't we start with you? Do you believe sustainability initiatives improve shareholder value? And if so, in what sense?
Well, I think absolutely they do. I think by having a proper sort of framework in place with regard to, sustainability, ESG, the whole ESG, I think if you consider the environment from us as a company, our technology helps, problems with the environment. That's why we've received the London Stock Exchange Green Economy mark. But I think even just having a framework in place where you can almost, with having these processes in place, you can help to future-proof the business, and I think that's where it improves shareholder value. Shareholders, I think, if they know that you've got proper compliance, governance processes in place, it probably feels like a sort of a safer place to invest their money. Because, as I say, with regard to sort of future-proofing, if you consider recent events over time, even, for example, COVID, I think companies who had proper governance structures in place, proper procedures in place, could cope a lot better when COVID actually hit. And, we are ISO accredited, so we are ISO accredited for 9001, also 14001, which is the environmental ISO, and then 27001, which covers IT security and things like that. But I think even just 9001, we have our risk register, where as a company, we've got to consider what risks might hit us as a company and what we as a board are doing to mitigate against those. And I think that all of that just, ultimately in the long run will help. These sort of processes also prevent things like fraud and all sorts of issues that I think could be negative from a shareholder point of view.
Okay, thank you very much. So Ian, obviously a very different business from John and Heather's, but how would you answer the same question, which is essentially, how do these initiatives improve shareholder value? You're on mute.
That was the best bit I just did then. Okay, so I'll do it again now. So the key thing we're trying to find in our industry is data, and I think that any shareholder return at this stage is going to be beholden to making sure that data that's provided is accurate. Where we are currently in our industry, we're the only company that's actually put out a meaningful data measurement of our footprint and of the impact on our environment, and that's only within what we actually do ourselves. So with the scope 3 impact, as in how we help reduce the impacts for our customers, is extremely difficult to measure. However, we know it's going to come, and we know that the company that actually succeeds in understanding how that data is easily collected and measured and compared across the platforms is going to be very successful. We need to make sure that we're not just a part of the story, we're not just towing the line, but actually that we're leading on it, and that actually we're a very key voice in making sure that movement happens sooner rather than later. So how does it impact shareholder return at the moment? I would say for Blackbird, it's still not the key thing that people look at Blackbird for. What they look at us for our scale and how we're going to take over a huge market. But as time goes on and this data becomes available, it's going to be so important. So yeah, we're very happy to be the leading in this space.
Okay. Alex, you covered some of this, I think, before, but have you got anything to add?
Oh, I mean, I think for us, unlike my colleagues on the call, I mean, we're in a renewable business, right? So for us, we are in the sustainable business. That is why we founded the firm, and that is what we do. I think the challenge for us is it's very easy for us to kind of rely on that, right, without actually doing the work that we need to do around the areas of ESG, S, and G to be able to prove it to investors and be able to have that dialogue with investors. So we are in the business of sustainability. We need to be able to communicate what that means in terms of performance, and we can see our performance is strong, and what it means to be in terms of better guardian of capital, better stakeholder in the community. We have hard assets in the community. How are we interacting with the community around that? How is our workforce set up to be a guardian of capital sustainably for our investors? All of those are kind of big questions for us, and ones we keep trying to answer.
So okay, so let's move on to the next topic then, which is these sustainability initiatives that we're all talking about, but obviously from different perspective, because the businesses that you all run are very different. You need strong management, and you need basically to build a good corporate reputation, and that's very important in terms of attracting and retaining talent. So I'm sure no one will disagree with that. Then you look at the other side, which is the P&L side, if you like, the financial side. How do you balance everything that you're doing and still maintain financial performance that you think is acceptable to shareholders? So who would like to go first on that? Or am I going to pick some? Okay, go on, Alex. Go on.
Because I don't think the question is right. It is not balancing P&L against these initiatives. The premise is wrong. The initiatives themselves deliver better performance, for sure. Thinking about your activities in a sustainable way, whether it is having the lowest carbon in terms of a data center, whether it is running very efficient technology, or whether it is having hard assets which are balanced in the grid. That is an initiative which delivers better profitability and better income for our shareholders. So I disagree with the premise. It's the same thing. To be a good custodian, one needs to take on board ESG and integrate it into the business.
I think the question was asked more from the framework of investors looking at businesses, wondering how you can have the best of both worlds, and the answer is that you can, right? So does anybody else want to add to Alex's comments?
I would say that, I think Alex nailed it there, but just to add to it, I mean, people join because we're doing great things, and great things for us come with multitude of benefits. So our engineers join us because we're innovative and we're doing innovative technology, and that innovative technology relates to sustainable technology, which is also cost saving, and it's also energy saving, and it's also time saving. It's all kind of a virtuous circle. If you're creating the right atmosphere and the right mission, then I think that it's easy to do both, especially when you're in tech.
Right, Heather, have you got anything to add to this?
Yeah, I think if I think about us as a company, I mean, it is really what drives our business and our sort of our revenues and our profitability. I mean, if I consider what we do in India, where the majority of our market is, not only are we helping them solve the problem where they suffer significant losses due to theft of electricity, people not paying the bills. So our technology was designed specifically really for India, for the Indian market, to address those problems. And we've worked closely with the government for 10 years to help them to address these problems. And in addition to that, if I consider, throughout, we've always sort of kept in mind the, Prime Minister Modi's mantras of skill India, make in India. So that's why we have, our technology we've developed, we have it made by manufacturers in India. We've created jobs, 60-odd jobs in India at present, obviously more over time, throughout. So not only are we helping address those problems, but we're also keeping all of the requirements of the Indian government in mind, and all of that is driving our revenue and business model.
Okay, thank you very much. So let's drill down to the next level down. So if you look at the stock exchange green economy mark, there are basically three elements that I think we'd all agree are incredibly important, which is climate change mitigation and adaptation. There's waste and pollution, and there's the circular economy. When you're running your businesses, how do you decide which of these three are the most important, or how do you prioritize your initiatives in these areas? And then the second part of the question is going to be, how do you communicate what you're doing clearly to investors? A lot of investors, I think, understand ESG as a big word. They don't probably understand, maybe in many cases, exactly what it means in terms of the adding value to the business, but they do understand what it's about. Your job is to assess how you're going to attack each of these areas. So would you like to start off with that, Alex, to begin with, as you're the most in-depth in the industry?
Ooh, what? Thank you, Richard. So what I think the circular economy is, I think all of them are important, right? We are in a very difficult situation, right? We have, no one, I think, has seen the summer we all saw, right? We know there's really significant problems, and those problems are causing real live effects in terms of stability in our economy, and our energy system, which is the business obviously we're concerned with. This winter, 15% of households in the UK will choose between food and heat, which is staggeringly terrible. Our assets we aim for our assets to deliver electricity when it's needed, therefore lowering the cost of electricity, keeping the grid balanced. So, those things around energy system volatility, around climate change, are very important and enable us to deliver a very good return for investors. I want to pick up on the point you made about the circular economy. Circular economy is very interesting. Our assets are complex, and there's lots and lots of things within them. And so our assets should last 20, 25 years with components being changed, but there's very dangerous materials in some of those assets which need to be taken care of correctly. So we, as a good investor, want to make sure that we have the capital and the arrangements in place at the time of investment. So 20 years hence, our assets are decommissioned correctly, materials are broken down, reused if possible, or disposed safely. So that is the right thing to do as an investor, because we'd open ourselves up to liability, and it's the right thing to do as a custodian of sustainable capital to make sure that our assets are actually value add to the environment. So, picking on those two things, there's lots within that, but they all become then the same thing. They become integral to the business decision.
Okay, so maybe move on to Ian. Coming at this from a completely different angle, what do you think of how you prioritize what you do? We'll talk about how we communicate to the investors in a second, but why don't we go through your thought processes running the business and how you handle these three issues?
When it comes to the scale of carbon pollution in the media sector, it's equal to the aviation sector. It's huge. It's a big thing. No one really talks about it. In fact, it's getting talked about a little bit more now. But the major guilty parties are the streamers, the ones that are putting out the large amounts of content over the internet. It's those guys that really have to start really focusing on this. And I think they're starting to, you know, and I think that companies like ours can kind of bang the drum so that they can really, you know, kind of shame them into doing things. But what we can also do is actually start to work with them on innovation of codec and efficient streaming technology. So that's something that we would look at as well. You know, when it comes to how much of a part Blackbird can play in reducing the overall scale of the carbon footprint of the media industry, it's quite small. You know, video editing is not, post-production is not the major guilty party. But what we can do is start to really to vocalize the scale of it, and also start to innovate around producing codecs to bring that down. So yeah, we would liken to bringing a knife to a gunfight at some point recently by a journalist. I was like, well, I'm quite happy with bringing a knife to a gunfight if it helps to kind of, you know, to bring everyone's attention to it and bring it down. So yeah.
I think what you just said about the scale of the pollution would surprise lots of people. Can you just elaborate a little bit more on that point?
Yeah. So the scale of the carbon footprint of the media sector, particularly not so much production, although production is a significant part, but particularly distribution is of the same scale as the aviation sector. Yeah, it's depending on which data, and I said before, data is not particularly reliable. You believe it's between 3 and 5%. So it's huge.
Okay, Heather, I think we'll move over to you for your comments.
Yeah, so I mean, I think our actual industry is an industry that is helping to address some of the problems like this, which is why we were accredited with the Green Economy Mark, because the technology that we sell actually helps with the carbon footprint, and that it, you know, just by automating the entire system, it means that there's less people driving around. You imagine the size of the meter market in you know, electricity meter market in India. And if you've got meter readers driving around all over to take meter readings and all the sort of manual side, and people going out manually to go and pay their bills, you just think about how that has been addressed by automating the whole system. So I think just our actual industry is something that is already looking at addressing this problem.
Okay, so let's just move on to the second part of that question, which was, how well do you think you are communicating what you're doing to shareholders, and do you think this is a situation that is improving, or do you think that you've reached a level of communication that's balanced? Okay, Ian, why don't you go first on that?
I would say that our shareholders have absolutely bought into the fact that it's part of our DNA, and we communicate it at every opportunity that we get, because it's very important really to the team. It's very important to me, and it's very important to everybody that works for the company, so that we continually drum it into the shareholders, so we know that there's importance. And I think they bought into the fact that Blackbird is, you know, flies the green flag for sure. In fact, you know, the IABM awards that we won in December was actually created because of the efforts that we've made in the industry. So it didn't exist before. So we kind of were there to kind of really kind of, you know, raise the issue for the sector. But yeah, excellent. It's a key part for us.
Alex, anything to add?
Yeah, I mean, so we recently published a full ESG report, right? A separate report that went out. I recommend everybody should read it. And I think within that, we put an enormous amount of effort. We have dedicated full-time members of staff who are focused on, you know, understanding what we're doing. What are the metrics? Carbon, renewable energy, what are the metrics in society, what are the metrics in governance, and then matching it up against these, to be honest, quite complicated reporting formats coming through from the EU and the UK and the UN. So no, I think that was our first standalone ESG report. It will not be the last. It will be an ongoing activity. And so we aim to get better and better.
Okay, thank you very much, Heather.
I think we probably can do more to communicate it. I think we take for granted that people sort of know and understand what we do, but I think we probably can do more to communicate, especially as it's becoming more of an important topic. Every year, obviously, ESG requirements in terms of annual reporting are growing, and we did put a lot of effort into this year to really try and get the message across in our annual report. But I think it's something that, you know, as the other two have said, that I think we can certainly continue to improve as time goes on.
Yeah. To Alex's point, actually, yeah, we've also put out we aim to put a white paper out every quarter with the company, but we have put 2 out on the environment, and not just the impact that we have, but also the impact that the industry is having on the whole globe. So yeah, I think it's really important to kind of communicate that really in depth with some detailed studies and data to get the message across.
Okay, thank you for that. I'm going to ask a quick question about M&A activities. Do you think what we're talking about today, essentially sustainable finance, is actually impacting valuations in the market, or do you think people are more concerned about the more traditional metrics? Have you seen any evidence where this has caused activity to change?
Well, I would say there is a range of investors who view ESG as important enough to them that they won't invest unless the company has adhered to a set of standards. And so the logical conclusion on that is, if there is a smaller universe of investors who wish to buy your share, you will not have a high valuation as you would if those universe were available to you to buy that share. So for sure.
Anybody else? Any comments on that?
I think it's Alex is right, and it's going to become more important. So yeah, it is absolutely right on a number of levels, and it will absolutely drive share price going forward.
Okay, so we're going to conclude with a general question for you all, which is not about your company, but it's about your sector and the attitude of your competitors and other component members of your sector. What do you think they are? How impressed are you with their attitude towards sustainable finance initiatives, and what really should they be focusing on to improve matters if they're not? Would anybody? Why don't we start with you, Heather?
Well, I think I do see it in our sector, and as I say, I think our sector is really one that's trying to address this. But you know, for example, we are in the UK smart metering contract, and even within that contract, we get audited according to our various ISOs, which are all very relevant, including, as I say, the environmental one, all very relevant to, to ESG. So, and this contract actually, I mean, this contract was signed a couple of years back, and the fact that it's a contractual requirement for everybody to have certain compliance in place. So I think our industry is very much looking at it already and addressing it. We certainly see within our supply chains, and we try and do it as far as possible by only dealing with very reputable companies. Many of the companies that we deal with are huge global companies that already have ESG requirements, many of them being listed in either the UK or other stock markets. So within the whole industry that we deal with, I think it's something that is very much at the forefront of people's mind.
Okay, well, look, thank you very much indeed to you all, because that concludes the panel discussion. I'd like to thank our speakers and our audience for attending the forum. Thank you very much.